Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We're going to rip up the script, and we do this with great respect for BlackRock because they took the mathematician of China and elevated her to fame. She's driving, of course, all of investment strategy for BlackRock. We've spoken many times about Wei Li's accomplishments in her China. And in this hugely turmoil time, we rip up the script with Wei Li. Wei, I do want to get to the market coverage here. We've got an extended time with you on surveillance this morning. But I need to ask you to describe, out of Shenzhen, I want you to describe, you went to Cambridge, fine, but please describe the word respect that the Chinese government speaks about overnight. I'm sorry, Wei Li, it's like Bill Murray in Tokyo. For Americans, it's lost in translation. Please translate.
Well, actually what is happening right now is that nobody wants to call first. Right? Nobody wants to call first, and each is upping the pressure. So there's a lot of posturing happening on both sides before negotiation, which is why we think that it actually is not so rewarding to try to predict what is the next step of policy making or the next rhetoric. It's more rewarding to try to understand what are the rules governing negotiation, governing policy making that will ultimately shape the destination of where we're heading towards.
Where we're heading is on a different timeline. You know that I love the x-axis, Wei Li. I'm very delta, what's called in the Greek letters, folks, theta driven. I would suggest the timeline of President Trump in America with their linkage into BlackRock investment is radically different than the Chinese timeline. Discuss that. Is there a huge separation in short term and long term between the two cultures?
Well, maybe there is some time pressure because we are heading into midterm, for example, in the US next year. So things need to happen a bit more quickly. But what I meant by kind of rules that cannot be broken is more on the economic basis, specifically. You know, we have the U.S. looking to reduce trade deficit, but trade deficit cannot be reduced without reducing foreign lending by the same magnitude, right? So if you push that in that direction too quickly, it's going to raise interest rate and it's going to raise future debt servicing costs, which is why we saw the bond market rout last week. And specifically, we did this kind of back of envelope calculation, 25 basis point of long-term yields translate into roughly $50 to $75 billion per annum of additional debt servicing costs. And we're already at a point where we're spending more in the US, right? Like $150 billion more than last year this time. So these are the kind of checks and balances and influencing factors that ultimately could drive where we're heading towards. Now, on the China side, the impact on tariffs on the growth picture is likely very severe, right? Like, so if everything kind of go according to plan, which is not the expectation, but if that were to happen, we're talking about hit to GDP to the magnitude of 2%, which would mean that the government would really risk kind of significantly undershooting the growth target of 5% this year. So both sides have checks and constraints that they need to balance. And this is what we pay more attention to rather than what they're saying on a single day, because of course they do not want to put everything on the table as they are getting ready for negotiation.
You gotta love a woman that went to Raffles Junior High School in Singapore. We welcome all of you on the Pacific Rim in your evening here on YouTube. Wei Li of BlackRock with us on truly an historic Wednesday. Paul?
Wei Li, talk to us about kind of how you think about the tariff backdrop here. President Trump did initiated the 90-day kind of freeze here, if you will, on many of these reciprocal tariffs. how do you just kind of factor all that in here? Because I'm listening to companies' conference calls, and I don't think corporate America knows what to think. How are you guys approaching it?
I think the fact that you were just talking about, I think United Airlines giving out guidance in scenario.
Right.
In a scenario way with two scenarios, that's really, really unusual. But that has been how we think about kind of asset allocation already. So this is an unprecedented word. Already economic uncertainty was at really extremely elevated levels because of mega forces, AI, low carbon transition, and now policy uncertainty is at a record high as well. So compounding economic uncertainty and policy uncertainty means that we cannot do point forecast anymore. We have to think about kind of investing through scenarios. So I'm happy to see that corporates are doing that, but specifically in terms of the tariff backdrop that you asked. After April 2nd, it was very concerning for us. Not so much, well, yes, indeed, yes, also because the magnitude of the tariffs were bigger than expected, but more important than that is the fact that there didn't seem to be checks, didn't seem to be constrained in terms of how US is setting out to make policies. And that is why we were more concerned after April 2nd. But the fact that they walked back last week, they walked back and they put in place the 90-day pause, gave us some comfort that the checks are still in place, even though immediately after April 2nd, it didn't look like they were. They still were in place. They will help guide where we are heading towards. And that gives us more comfort to then think a little bit longer term. Of course, in the near term, there's still going to be a huge amount of uncertainty as negotiations go ahead. Both sides of negotiations, I'm talking about kind of all the bilateral negotiations that are taking place. It's likely going to throw out a lot of headlines, drive market volatility, but knowing that there are checks in place that can influence the destination is important for us to be able to focus on fundamentals.
So we saw just in this quarter, this first quarter of 2025, Wei, just some reverse of funds flows out of the U.S., selling bonds, selling stocks, selling the dollar, and perhaps going into some European markets, taking advantage of the more stable markets here. Is that kind of a short-term trade, or is that a longer-term investment thesis from your perspective?
I think it's too early to call this a longer-term unwind of multi years of U.S. exceptionalism. I think the reversal that we saw year to date very much reflect the stretched positioning in U.S. assets and also the greater gap of valuation between U.S. equities and European equities, for example, and the rest of the world, for example. But to say that this is kind of the end of U.S. exceptionalism is premature, I would say, because drivers of U.S. exceptionalism include the depth of capital markets, the appetite for risk taking, energy independence, greater spend. We see that on the fiscal front that is supported by exorbitant privilege of making sure that the rest of the world can fund it. I mean, all of those reasons are why companies like Nvidia exist in the US and not elsewhere, right? So I think it's way too premature to say that this is the end of US exceptionalism. I would also observe after April the 2nd, the drawdown in terms of equities across the world are almost the same. Europe was selling off as much as US was selling off after April 2nd. I think it's very early to say that Europe will definitely be a winner, but there will be selective opportunities.
Sarah, bring up the drawdown for you too. We're sub 18% on this. It's a correction. It's a bear market, but we've had a recovery. Wei Li, in the zeitgeist this morning in the blur is the basic idea that companies are buying back their shares, that senior executives have an optimism. There's a horizon out there somewhere that we're going to get to. Where is Wei Li's horizon to get beyond this crisis? Are you looking at it this quarter, this year, or is your horizon distressingly out years?
Well, I think with the evolution of technology, hopefully we're all living longer. So I hope I have a longer term horizon. And with that longer term horizon, I would observe a lot of the correction drawdown that we have seen in quality companies may have been overdone, right? Like if you think about kind of the valuation metrics for some of the quality tech names in the US,
Right.
they are at the lowest level since the beginning of ChatGPT. Now you can say that valuations has lost all meaning because analysts are slow to adjust their earnings revision, maybe, but it still doesn't change the fact that some really good value names out there, and the drivers in terms of AI adoption hasn't changed. So I think there are some really good opportunities longer term.
One final question, Wei Li. Thank you so much. Generous of you to take this time with us today. So I'm up at like 2 a.m. or midnight or whatever. You know, Brockton's got me up looking at Red Sox highlights. And Wei Li, I see that the government of China is going to ban the mailing of packages from Hong Kong to America. What does that signal to you?
I think this is an example of kind of each side upping pressure as they get ready for negotiation. Nobody wants to call first. They want to increase pressure to bring the other side to the table. This is one of those things. I think, you know, like Boeing, yesterday the news was another example, and then the H-20 chips, another example. I think we're going to see quite a few examples of this as we get into negotiation, but then really not as much attention should be paid to kind of the bit by bit incremental news, but really pay attention to the laws, the checks that will govern where we're heading towards is how I think about investing right now.
Wei Li, thank you so much. With BlackRock this morning, just brilliant. Thank you so much.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Things have changed. There's a crisis in America, and Dan Ives has piped it down. There was a color scheme going on back when there was American exceptionalism. And for those of you today, in honor of Louis Vuitton, the challenges they had yesterday, he's going with the washed pink shade today.
Okay.
A la LVMH. Yep. So we have a more subdued Dan Ives with us. Dan, how have you survived the last 10 days? You've had to bring some price targets down. What has been the Ives methodology to reset?
A lot of coffee, a lot of calculators. And look, to me, it's talking to so many people throughout supply chain, customers, companies to understand basically scenarios. And that's how we viewed it. Like, what are number cuts going to look like? And then what does that mean for prices? And I think you're starting to now see the results of that, Nvidia being the first one in terms of the real effect from this tariff war.
So, Dan, how do you think about, I guess, the underlying tech spend globally over the next 12 months? To what extent, if any, does that likely going to come down?
Yeah, so Paul, I view it as, let's say, $325 billion Mag 7 spending on CapEx for AI. That's assumed, let's call that 280, 290. In other words, like that's right now what I think is baked in. Like you already are going to have probably 10% cuts, could be more. But I think most investors are going to basically, you're not going to have guidance. You're going to toss out June. You're going to toss out September quarter. You assume some negotiation gets the cooler heads. And I think right now, every investor I've talked to, you're looking at 26 numbers to understand what the normalized numbers look like with some sort of baseline tariff.
I mean, let's do NVIDIA quickly here. I want to get to Apple, which I think is the attention of our listeners and viewers. Were you surprised by the NVIDIA markdown overnight?
I mean, I think it's a knee-jerk reaction. Obviously, it's a headline and it's negative news. But I mean, to me, Tom, like I already assumed 10% cuts.
Right. Okay, let's start with Apple here. And you and I have gone back and forth on this over the years. And over the last 38 months, Dan Ives has looked like a genius on Apple until this crisis. Is there persistency of cash flow that is provided for share buyback and dividend growth? Is it still there?
It's that. I mean, look, even, when you scenario and sort of put pressure on the model and stress test it, cash flow comes down 5%, maybe 7%. The reality is that a lot of that on Apple, I think, starts to now get factored
Right.
in. It comes down to with China numbers, unless these tariffs in their current state stick for 90 days and longer, then
Right.
to me, Apple continue right here. I mean, it is a name you own.
Does Tim Cook, Dan Ives, with all of your Pacific Rim work, does he have a special relationship with Beijing?
Oh, I mean, look, Cook's 10% politician, 90% CEO. No one understands Beijing's supply chain better than Cook. The reality is, I mean, look, India gives some optionality where you could, call maybe 5, 10%, but they have no options outside Asia. I mean, and that's right now what they need to navigate and also make sure China, there's no retaliatory toward Apple, there's no retaliatory, and we've talked about toward Tesla. I think right now that's front and center what he needs to manage as well as within the White House to make sure these tariffs don't impact to the extent, look, you can't have $2,000 iPhones. That'd be 30% demand destruction.
Wow. So, Dan, I mean, when you talk to the executives in Silicon Valley, do they expect this to be the new normal for at least the next 4 years, I guess?
No. I mean, look, whatever they publicly say, I mean, I could tell they're figuring out when negotiations happen, what the baseline gets to, what they're going to pass through, what they're going to eat, what they're going to ultimately pass through to the rest of the supply chain. And that's what they're trying to figure out in terms of what the new baseline will be once we get through this, basically, a UFC battle between China and U.S.
Yeah. Dan Ives with us, folks, here with Wedbush. We continue. We welcome all of you in your commute across the nation. Just a terrific set of conversations today. Out on YouTube, fiery chat out on live chat there. Thank you so much for your attention on YouTube. Subscribe to Bloomberg Podcast. Just amazed by the permanence of YouTube in living rooms and offices around the world. Dan, I'm not going to mince words. Reuters did a story out of Paris and Alvarado, Texas the other day on LVMH, Louis Vuitton, that they're having trouble with American labor manufacturing American bags. When tech people or politicians start spouting off about bringing those manufacturing processes of the Pacific Rim over to America, do we have the labor force with the discipline and the culture to make that stuff?
No. And we've talked about it, a lot over the last 2 weeks. That's a fictional tale. And the reality is that you could say made in America in terms of like the reality in terms of the labor force, the cost inputs, where the raw materials are coming from, and also the IP made in the supply chain. You have a factory here where the chips made, they're made in Asia. And that's the reality of the situation. And that's why I've said, like, this is something where for the first time in 30 years, the U.S. is ahead of China when it comes to tech. But if you don't navigate this third rail issue the right way, you'll cut the knees of tech, take it back years, and guess who wins in that? It's China tech.
Dan, is there a place in your coverage that is a safer place to be, whether it's software with Microsoft or, I don't know?
Yeah, Penn State baseball.
Yeah, exactly.
Exactly. I'd say it's software and cybersecurity. I mean, those are sort of the buckets from IBM to Oracle to Microsoft cybersecurity, whether it's Palo Alto, CrowdStrike, CyberArk, Checkpoint. Those are almost the defensive safety blankets in tech in terms of in software and cybersecurity, even though you'll have number cuts there too. But again, no company's going to give guidance in earnings season, and the street's already factoring and baked into this. You have 10% cuts across the board.
Okay, out of the pandemic, Dan Ives, I got a fancy standard deviation chart of Apple. It's well behaved, and it's a great Ives rally. The people that hate you aren't aware that you nailed that. As a generalization, you nailed the move up is an Uber bull. I'm not that far out of two standard deviations down on Apple. I mean, the phrase Apple's cratered is not accurate, right?
No, I mean, look, I think because the reality is that unless you assume just a black swan event Armageddon, everyone understands that like it's about it's the free cash flow. It's the services business, which is not really that impacted from tariffs.
Got that right.
That gives you massive downside protection in Apple, and that's why that stock is holding up the way it is relative to them being in the eye of the storm.
So do you have a buy on Apple?
Of course, dude. To me,
I
Apple
just love getting them upset.
To me, Apple over the next 12 to 18 months. You own Apple, you own Nvidia. I mean, I'd argue you own Tesla if you navigate these storms. You have to navigate the storm over the next 3 to 6 months. You do not panic. You're in a game of high stakes poker that's playing out with obviously the economy, with it.
I mean, Paul wants to get in here, but I'm sorry, I got to do this. Can Penn State football beat Nevada August 30th?
Oh, that's going to be a nice tune-up game.
I mean, yeah. Look. Again, like I said, for all the SEC fans out there, they had their run. Now it's Big Ten's run. Penn State 25, Michigan, Ohio State, and then Penn State 3 in a row, right? For natties.
And then they play FIU. I don't even know what FIU is. Dan Ives, go away. I'm sorry, Paul. I know you wanted to get. I just love busting his chops.
Little Penn State.
Dan Ives, thank you so much. Wear something colorful next time. He's with Wedbush, and serious conversation there, folks.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We're going to do this wrapped around retail sales here, but not on retail sales. We're going to get him on for a much, much longer conversation here in the coming weeks. In 2007, the most famous strategist in the world was a guy named Matt King. He was definitive at trying to figure out the path for Lehman Brothers. And before that, did something that I featured in my book with David Goldman of Bank of America, which is forget about the garbage out there in derivative science. Look at the super senior tranches. Matt King, over the years, has devolved into Satori Insights and joins us now for far too short a conversation. This is for Global Wall Street. Matt King, LIBOR OIS is dead. We have SOFR, SOFR, is compared to the 10-year yield or the 2-year yield. That looks at the trust market out there. Is the trust of the financial plumbing system broken?
I think it's closer to breaking than many people make out. For me, what's going on at the moment is this big disconnect between, you heard it, all your equity and your credit guests focused on tariffs and on earnings and some of the trailing data. And then conversely, what we see going on in treasury markets with the rise in term premium, the steepening of the real yield curve, what increasingly looks like a run on the dollar and capital flight out of the US. And then most obviously in gold. There's just this big disconnect. And it does remind me of some of those other periods of my career that you're kind enough to mention, where, the people in one market are looking at that and thinking, hey, this could come to dominate everything else. And other people need to wake up.
We did a seminar with Lousy Coffee years ago. I can't even remember the hotel, folks. This is in New York. And Matt King, what we talked about was leverage within the system. Is there a leverage out there? Is there a Myron Scholes LTCM leverage out there I can't see?
Mostly no, or at least not in the way that people think. So people have been excited about the unwind of basis trades and some of the moves in swap spreads and pointing to hedge funds. And yes, there has been this big pickup in leverage and repo activity, especially for multi-strat funds. But I don't think that's the problem here. If anything, I would say that there's almost a diversifying element relative to all the long-only money that is poured in over the last decade or so. And for me, there is this scary thing that all my career, I focus on the thing that's about to blow up. And each time the crises seem to get bigger and bigger. The debt that's out there now is across non-financial sectors as a whole, and more than anything with governments, including the US government. But it's not the financial leverage in quite the same way as it was previously. And on the one hand, that makes it slower burning. But on the other hand, the feedback loop from markets through to the economy is larger ever than it's been in the past.
So, Matt, I guess we put it into context the sell-off in the equity markets, people selling treasuries, selling the U.S. dollar, buying gold. What does that tell you? Usually you would think that treasuries and the U.S. dollar are safe havens in a time of uncertainty.
We heard some of it from Jamie Dimon yesterday, except all the things he said could happen, the erosion of the US's safe haven status and potential exodus from US assets, I would argue that they're underway already. It's difficult to see in the data, but I think it's highly likely that we get more of that because many of the moves that the Trump administration are making, not only with tariffs, are basically a direct assault on the foundation of rule of law. We heard it in the news previously with the direct defiance of the Supreme Court ruling. And this is the foundation of markets and trust, effectively.
Matt King with Satori with us. We will continue with them around this retail sales report. And I promise for Global Wall Street, we'll get Mr. King on here for a much, much longer conversation. Matt, we'll continue with you. Please stay with us. The VIX 31.52 into these retail sales. Futures at -40 right now. The 10-year yield 4.32%. The Sweeney yield 4.21%. And we'll see this important data come out. Of course, retail sales is a nominal number. It's before inflation. There's a month-over-month focus on it, and I focus on the control group, where we're looking for a lessening, a tertiary statistic. The Fed services business activity comes in worse than survey in a stark -19 as well. The control group comes in a little light at 0.4%. That's lower than the 0.6% expected. Futures do a little bit better than where we were. I mean, Paul, at the end of the day, it's sort of like where we were, I think.
Yeah, I mean,
a jumble.
Yeah, you saw the retail sales come in at plus 1.4%. Last period was 0.2%. So, a little bit of front running the tariffs, perhaps, is what economists are suggesting.
Our economic coverage, all that we do there on Bloomberg Surveillance, it's brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms. With a partner dedicated to your success, go to commonwealth.com to learn how. We continue with Matt King of Satori on the basis trade, on the shock of the leverage system. How does something as esoteric, Matt King, as a basis trade affecting hedge funds that get it wrong, but what's it mean for the general public?
At the moment, I would say the basis trade in itself and the hedge fund positions in themselves, not very much. Maybe they're the beginning of the inkling that we need to look a little bit more at the plumbing and at scope for flows, and that volatility may trigger some bigger moves. But for me, in themselves, there's no real sign of stress in repo. It's no worse than it would be over a quarter end. There's a little bit of on the run, off the run kind of lack of liquidity in some markets. But in general, that's not where the problem is. The problem is this potential for long-only money around the world to shift from risk rotation away from the US to outright risk reduction, and for investors in Treasuries to take seriously and price seriously some of the threats which increasingly are out there. And we start to see it in the dollar. We're just beginning to see it in Treasuries, but it can easily run much further and frankly feed on itself.
Matt King, one more question. We got to go back to retail sales. Matt King, as simple as I can, with all of your decades of excellence, is American exceptionalism done?
Even if Trump were to wind back all of the tariffs, even more than he's done already, I think it would be very difficult to recreate the trust which is at the heart of the financial system and the financial flows, which frankly are at the heart of everything that has made America great. That's what's under attack here. That's why it's so serious, and that's why I think it's not in the press.
Honored to have you with us. Matt King, iconic at Citigroup and JP Morgan, before that with his Satori investments. Thank you so much. Satori Insights, I should say. Thank you so much.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
I was up practicing the currency knowledge, for Rebecca Patterson. She's with the Council on Foreign Relations, has a shingle out at Vanguard as well. We're not going to ask her about ETFs and Bitcoin. I was going to ask her about the Swiss franc. Maybe we'll get to that. But here's the future, folks, seriously right now. The World Trade Organization lowers their economic growth forecast for this year, for next year, Some of these numbers are huge, huge moves. Rebecca Patterson, you're expert at this. I mean, this is the future that we're seeing right now this morning.
Yeah, I've been trying to find when is the last time we saw a dollar, bond, and stock sell-off in tandem that lasted for more than a few days. And I had to go back to my friend Mark Sobel, who is a longtime Treasury guy, now the chair of the US at OMFIF, a think tank, 1977-78.
Nice.
So we haven't seen what we're living through right now in a very, very long time. And back then, what caused it was inflation expectations, lack of confidence in the Fed, lack of confidence in policy.
This is smart people like you taking the cacophony of news and lowering growth. In the zeitgeist, Rebecca Patterson, are we underestimating the decline in real GDP and nominal GDP from the Trump events?
The hard thing is you cannot have confidence in any view. And we saw that with United's dual outlooks, because we could get deals. We could have the whole tariff war go away tomorrow. Like literally, we could. And at the same time, we probably won't. The 10% universal tariff probably stays at a minimum, something on China at a minimum. Those two things alone would take the tariff level significantly higher than what we've seen in many decades. So I think looking for a major slowdown in growth against that backdrop is reasonable. The only good news, and I think the people who aren't looking for recessions yet, is that we were starting from such a strong place, right? Yeah. We had record household wealth at the end of last year. We had very little leverage on household balance sheets, corporate balance sheets, relatively speaking. So I think people who are saying slow down but no recession are looking at that and hopefully lots of deals. I'm a little more bearish. I think that we're probably looking at a minimum a mild recession later this year.
I'm just reading in a little bit more into this WTO news. They slashed their global goods trade outlook. In its new forecast, the Geneva-based WTO expects the volume of world merchandise trade to decline by 0.2% in 2025, almost 3 percentage points lower than it would have been without the U.S.-led trade war. So
that's a major hit to global growth. I mean, basically what we have between the U.S. and China right now is a trade embargo. I mean, with a tariff rate at that level, we're effectively saying no trade. And the U.S. imports half of its consumer goods from China. So right now, inventories are getting built up. We're getting front loading, if you will, of inventories and spending. So we're going to see decent data for the next few months. But then we're going to have a Wile E. Coyote moment where tariffs come back in, the reprieve is over, the inventories are used, and we're going to be paying a lot more for shoes and clothes, and the consumer's going to get hit hard, I think.
So what do we do from an investor standpoint? I mean, you look at it, and I think the only thing I see is gold out there is kind of where the funds are flowing. But, a lot of stock folks are saying, hey, find the good companies, the good names and you can buy them cheaper here.
There is an argument for active stock selection right now with all the money in passive index funds where you're just getting in and out of a country or an entire sector. You are going to see some stocks that have better fundamentals than are priced. So I think that is one approach to this. I think leaning in on large caps and on consumer staples, so defensive areas. I think if you want overseas diversification, the UK looks like they may get a trade deal with the White House, and they tend to be a more defensive market overall. That might be another place I'd nibble at. You mentioned Switzerland, Tom. Normally, that's one of my go-tos for downside protection. But with the pharmaceutical tariffs, I'm not sure that one works as well this time.
We're going to stop the show because this is what she does. She triangulates the issues of the moment. Yesterday, we started in on antibiotics, pharmaceuticals. Somewhere between 80% or whatever of antibiotics come from China. There's a whole European drug trade as well. The media is way underplaying pharmaceuticals, aren't they? We're like Apple's sexy cell phone and all that. Those antibiotics we take for granted are really under threat.
I mean, my hope is that just with some of the exceptions we've seen in the last week, if supply chains become truly threatened later this year, we will see exceptions for pharmaceutical ingredients and actual pharmaceuticals, because there's no way the voting public is going to be okay if they can't get their meds.
On your commute this morning, good morning, Bloomberg 1130. The entire Patterson family is listening in. We say good morning on your commute across the nation on YouTube. Subscribe to Bloomberg podcast, I should say. Just thank you so much for that interest. Okay, because Rebecca was here, Paul. I had to go adult. Usually I go Euro Swissy, but I did dollar Swissy logarithmic.
No boy.
So you get some curvilinear move here. There I was on a street in Lausanne, Switzerland.
Wow.
Bratty 15-year-old, and I was doing the math. 4.3 Swiss francs to a dollar. I can't figure it out. And I'm sorry, it's a linear decline, but with a new Trump acceleration to ever stronger Swiss. I got gold at $3,200 per ounce. What does that signal to you on the JP Morgan desk years ago?
I think there is a flight to safety, and the dollar right now is not seen as that. I think, or bonds for that matter, to the same degree they are normally. And then I think there also is an element of repatriation of foreign investors who had been loading the boat with U.S. assets for the last 18 or so years, taking some money home for economic concerns, political concerns, et cetera.
All right. So can central banks have an impact here on this global trade issue, a global economic issue? Think about just central banks in general, and we'll hear from the Fed soon.
Yeah. So we have Powell coming up. Cutting rates is hard if inflation rises or is sticky. So central banks, especially in that situation, will move slowly. So they won't come to the rescue that way. If the bond market freezes up, we could see stabilization measures like we saw in March 2020 or around SVB. So we could get financial stability help, but we might not get growth help as quickly as we like. One thing I'm watching today, guys, is the meeting between Trump and the Japanese trade delegation.
Yeah, that's right.
Bonds are coming up. Japan owns $1.1 trillion of U.S. Treasuries. I just have to think they're going to have a little discussion about that. What can Japan do to help lower U.S. financing costs? I don't know what Japan would want to do, but it wouldn't surprise me if that's a topic.
Rebecca Patterson, now with the Council on Foreign Relations and the website, folks, I can't say enough about it. And Foreign Affairs magazine just lights out. Lawrence Friedman in the new issue on war, truly an expert. One time with him years ago. And Adam Posen, everybody talking about his article of the last 3, 4, 5 days. So you don't know this, folks, but the cafeteria for the Council on Foreign Relations is Match on 65th Street.
Yep.
Everybody goes in there. You can sit there. It's like the number of PhDs at a lunch at Match. And excuse me, Paul, lunch at the CFR is not 12 noon. We're talking 1-ish, 1:15. Yep. And they're in there at the wonderful Match on 65th Street. There's like 18 PhDs around a table. What are you and Froman talking about negotiation? She's laughing at me. Negotiation.
I know. I'm just saying I haven't been invited to Match. I'm like, I need to talk to Froman tonight.
Tell Froman and get over there and go to Match. But Rebecca, the issue here is there's this word negotiation, and the president, I'm not being a critic of Trump. Don't give me grief, folks. But he's got in his mind his negotiation, and the Chinese are talking respect. I have no idea what the Japanese are talking about. Define the word negotiation at CFR.
Well, there's what we've seen traditionally, and then there's what we're living through now. I think what we're living through now, who knows what the number is, 70, 75 countries in 90 days. You have to do a deal every 30 hours or something. So that's not going to happen when they normally take quarters or years. I think our best hope is that we get a number of countries to sign, understandings of what will happen, the kind of beginning of a trade deal. And it's enough of global GDP, enough of U.S. trade to calm the markets, at least somewhat, that the worst case scenario is off the table. Japan would be a huge win. And I think from what we're hearing from the Japanese, they are hoping to do a deal. If we could see that come out later today, we'll have another relief rally. I don't know if it'll last. They want Japan to help pay more for the defense umbrella from the United States. They want a stronger yen. Well, the yen already strengthened 10% this year against the dollar. So I don't know what else they want. They want Japan to keep raising rates. They want something with bonds. What will that package look like? More access for U.S. farmers to Japanese markets, cars. But I do think Japan, Korea, Vietnam, there are a handful of countries that I think are relatively more likely to want deals. If the U.S. can get that done quickly, that will help, again, for the short term at least, stabilize things.
Would that be enough to keep the U.S. economy out of a recession?
I don't think so. Honestly, the 10% universal tariff, and even if Chinese tariffs don't stay where they are, if they stay high, we're still looking at an average tariff rate in the United States that's going to be the equivalent of a $1,000-$2,000 tax hike per each U.S. household. So I still think you have a pretty material hit.
Brilliant question, Paul. A headline just out, AMD sees up to 800 million charges from U.S. export controls on MI308. The stock down 7%. Seems to be a trend. We got to frame this. You failed there, Rebecca. If we have a 10% tariff, that's only 5 times bigger than what it was before. Maybe I'm wrong. It's 4 times.
Right.
But we need to explain to people, even if we get the best outcome, what it does to the real GDP spirit and confidence of America is. I'm going to use this is a word. Bessemer. I gave a speech once at Bessemer.
Yeah, sure.
I had to use it. I got put in a timeout chair. Mm-hmm. It's a ginormous move up to 10%.
It is. And we're seeing the uncertainty in the surveys. Now we're seeing the uncertainty coming from corporations. I think earnings guidance has to get pulled lower, growth expectations pulled lower. We're going to see it. We're starting to see it now bubble up in credit markets. So it's coming.
Well, to Paul's question on Powell today, take it over to the monetary space. We talked about a J curve with Risciuto. Do you suggest that this is, yes, inflation, but then it reverts on a real GDP slowdown or nominal GDP slowdown to some form of disinflation? That's what's really
and that was
there.
Waller's comments, right? A few days ago, Governor Waller from the Fed said that he had 2 scenarios. Of course, we all have more than one scenario now, but he believes that the shock to demand from the tariffs could overwhelm the inflation and eventually lead us to enough disinflation that you could cut rates. That's possible. I think that's, if I get something wrong with my view, it's that the hit to demand pulls inflation down.
Bronze that, folks, because what's important there is Ms. Patterson has a more inflationary view and demand will crush.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The newspapers. Maybe she'll be tariff-free. What do you think?
I don't know. That's tough to do these days.
Lisa, what do you got?
I'll sprinkle a little tariff in there, maybe. Okay, I'm starting with this big boom in ultra-luxury cruises. Okay, the big
Charlie
ships.
Pellet.
Yes, the Charlie Pellet. I don't know if he does these extra luxury
ones.
ones.
on him, too.
Yeah?
Yeah, he just big
I want to
ones,
know if he goes on the big luxury. Okay, so they're growing 2.5 times faster than the overall industry. Because of that, Bloomberg Business Week says, and their words, not mine, snobs are enjoying cruising now. Okay, so look at these amenities. I don't know if Cy gets these, but amenities like private whirlpool tub butler service, private pool, starlit cinemas, free-flowing champagne.
Well, there, you got me there.
You got the diamond dust facials. I mean, all of this, $14,000 per week per couple.
Do you know what Cy's doing?
He's not doing that.
Celebrity Cruises Europe.
Okay.
Like they start up with the polar bears.
Okay.
Like halfway to Iceland, and he ends up off Crete somewhere. Sipping all the drinks. I've never done this.
Me neither.
But
Me
it's
neither.
like, I was in Venice, same, the square and all that. And one of the ships went by. I couldn't believe it.
Yep.
Yeah.
And it's ginormous, is what Bloomberg Business Week is saying.
Yeah, and they're saying it's like the high-end ones, like big names, like Four Seasons, like high-end concepts from Bernard Arnault, like is getting into this.
Cy rolls with that.
Dude, he gets the drink package.
The merch bag has LVMH bags in it. Next.
Oh, gosh. So Guy Fieri, right? You know him. He has this $100 million contract with Food Network.
Wow.
But one thing he says he's tough with is passing his fortune on to his kids. And he tells Business Insider, quote, if if you want this cheese, you got to get 2 degrees. Okay.
Really?
He took that actually from Shaquille O'Neal, said that.
Oh, okay.
But his oldest son, Hunter, he graduated with an MBA from University of Miami in May. Okay. His youngest son, Ryder, who's 19, finishing freshman year at San Diego State. And he's kind of fighting it. He's saying, you know what, Dad, can we get out of this arrangement? Like, I'm kind of done at this point right now. So his dad's saying, you know what, you got to go along.
Two things. I had a wonderful thing with Guy. I don't know, he was coming into Times Square or whatever. I literally went down to his restaurant and we did the whole meal thing at the bar and that. Total class act.
Yeah.
I got all sorts of grief. How can a fancy bow tie like you be dealing with this guy? And he was a complete class act. And it's interesting. I mean, he's like saying, get it done, kids, right?
He is. He has a huge fortune. And, if the kids want it, they got to get not 1, but 2 degrees.
Sounds fair.
He's saying that's, his dad kind of passed down from his dad.
Right.
Yeah, okay.
So.
Next, you got one more?
Yes, I do. Oh, cities with the most affordable rent, right? Because the cost of rent risen by more than 50% over the past 10 years. We all know that. Who has the most affordable one? We had Wallet Hub. They got the job done. They analyzed the median annual gross rent in more than 180 cities. They compared it to the median household income. So if you go by the lowest percent of income spent, Bismarck, North Dakota, then you have Sioux Falls, South Dakota, and then Cheyenne, Wyoming. And then you go to that highest percent of income spent, right? And you go to Oceanside, California, Jackson, Mississippi, and Birmingham, Alabama.
Wow.
So it just goes to show you kind of the differences.
And Newark's on the list as well, right?
Yeah.
Newark, New Jersey, I think, snuck into it as being really expensive.
It's getting there. Newark, New Jersey, 181. Yeah, highest percent of income spent.
Yeah.
So, and Miami, Florida, right behind that.
Yep.
Well, thank you, Wallet Hub, for that as well. Are you done?
They crunched the numbers. They did.
Yes.
They did.
Are you done?
I see. I want to go tariff, so I'm going to go tariff for you because you requested it. Okay. Canada and China tariff chaos hitting Vermont's maple syrup business.
Yeah.
And the reason why is
Yeah.
because all the things, stainless steel fixtures, like the machines to make it, come from Canada, like all these different things. So they're saying now because of that, Vermont's maple syrup.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.